Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today, we have PPI below expectations, helping the markets move higher. We've got native markets securing 53% of the USDH votes so far for that ticker for the stablecoin on Hyperliquid, with a little bit of drama and rumors about bribery, which have been denied. We'll break that down and what is going on there in a little bit. And we've got Avalanche aiming to raise $1 billion across 2 deals to establish crypto treasury companies to buy AVAX from the foundation at a discounted price. We'll break all that down as usual and have a discussion on where we think attention capital is flowing in crypto and NFTs today. So stay tuned for that. I've got Legendary in the co-host seat with me today. We're ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very risky. We do not know anything for sure, so please proceed with caution and exercise your own judgment in all cases. With that out of the way, Legendary, it is Thursday. It is the 11th of September. How are you doing? How are you feeling?
GM, doing quite amazing. Market's looking good. I did add, I feel like I'm speaking about Pokemon cards a lot. I did add a couple more cards to my collection yesterday. From the base set, from the early sets, was pulling the base set packs that were released on one of the platforms yesterday. And I'm exploring even more of those protocols. I feel like it's gonna be a very it's an interesting situation. Let's put it like that. So what is going on? On the one hand, you have a very limited supply of Pokemon cards. It is a pretty intransparent market, and you have the traditional collector base, which is collecting on card market, on eBay, from shops. Some obviously have way better networks, going to trade fairs, etc. And now you suddenly have 4 or 5 platforms coming in, seeing a massive demand from the user side, seeing extreme growth numbers. And all of these platforms now also try to get sufficient supply of those cards. And it's almost getting to an extent where if you're like just big enough as a platform, you can pick a specific set and basically control a significant part of that supply. And an extension at some point, maybe, and that could be the flywheel. Like, that is my optimistic scenario. Actually onboard some of the Web2 collectors to use these platforms, not for the gambling part, but for the trading and collecting part. However, the challenge is, that comes from me, like, basically having had calls with all of the big RWA platforms over the last week or so. The typical Web2 collectors are like gamers. They, in the sense that they don't trust crypto. They think our industry is a scam. So they don't necessarily are inclined to believe that a vault exists where those cards lie around. And if you order them or if you buy them, that someone will actually ship that 5K Pikachu, that 25K Charizard to you. But if some of those platforms, and some of them have this focus to also speak to Web2 audiences, will be successful with that, and people won't be scared just because there's like crypto in the background, because some obviously working on Apple Pay, credit card payments, some of the platforms already have those integrations live, then that could actually be a nice flywheel to get some of the Web2 collectors to not move over to Web3 because they still won't like our industry, but at least operate in a more adjacent way and get 1-2 steps closer to what we're doing in Web3, which would be a cool outcome, I think.
Yeah, it's an interesting take. I don't know. I liked in some ways where you were going with it, where I think if you broaden it out, we're operating in an even lower trust environment at the moment, with things going on in across society, with particularly in the West, with the kind of crime stuff, increasing lack of trust in institutions, lack of trust in governments. And I think, as you say, maybe the gaming industry, the collector base industry, is already reluctant to step into crypto because of the perceived scam nature of some of the aspects of the industry. And so I wonder whether, on top of all the other stuff, where we're seemingly moving to a lower trust environment, whether that's a bridge that people are willing to walk over. Anecdotally curious on your side, Legendary, like have there been, I've actually had two texts over the last maybe 3 weeks or so. It's the first time any friends this cycle have shown any interest in crypto. Like up until that point, it was nothing like 2021 where people seemed to be interested, wanted to get involved, was a bit more intrigued. I've had two in the last 3 weeks, which to me, well, I don't know if that signals anything in particular. I would have expected loads more interest in general, but I feel like a lot of people have tuned out, and it almost doesn't matter what price some of these things go to. Crypto itself is going to have to be abstracted entirely away, which is maybe the direction we're going in, but curious for your perspective there.
Obviously not empirically relevant. In my circle of friends, nobody, not a single person has reached out. The people who reached out in the last cycle, most of them got burnt on NFTs.
Yeah.
And the majority of them, in their defense, didn't leave crypto, or didn't leave crypto as an investment because they're not an active part of Web3. But all of them are only interested in BTC, ETH, Solana. Nobody has exposure to Hyperliquid because it's not that easy to buy from that outside perspective. There's a few and far in between who have BNB exposure, which, I mean, is quite good exposure to have. BNB is so close to all-time high. It's at $900. It hit all-time high a couple of days ago at $915 or so earlier this week. But no texts, definitely a different situation than it was a couple of years ago.
One question for you. This is an interesting idea. You mentioned people not having exposure outside the majors. And we definitely went through a phase where Bitcoin dominance had got so high compared to what it had been before. And people always assume that Bitcoin dominance is going to come back, right? That's always the baseline assumption. One interesting idea that I read recently, and if you think about it, I was definitely willing to entertain it. I talk a lot about trying to invest with some imagination these days, is if Bitcoin is gold, then gold is actually a fairly small proportion of the global economic asset classes, right? I don't know exactly where it ranks, but where exactly is it in that thing? Am I going along the right lines here, Ledge? It's certainly not the biggest, right?
No, it's not.
And the point being, things which have been developed after gold, tech, and useful things for society end up being far more valuable. And this post from Ryan Watkins, who's a pretty prominent analyst and investor on crypto Twitter, says, amuse me how many people here see institutional interest expanding beyond Bitcoin and their first instinct is to fade it. Boomers bid magic internet money to 2 trillion, but somehow it's inconceivable that they want to bid the platforms that offer a superset of that TAM. Is it not logical that market breadth would expand as regulatory clarity emerges and stablecoins and DeFi experience S-curve growth? Consider that gold, despite its size, is a niche asset in the global financial industry. Consider that tech platforms and cash flowing assets may actually have greater institutional appeal with much easier to understand growth stories. So I think part of this thinking is it's kind of just like, okay, fine, you're going to have gold. You're going to save in gold. Maybe gold, the way I was talking about it the other day, is like Bitcoin's there to protect your purchasing power. It's not, yeah, sure, it's going to go up forever against the dollar because the dollar's going down. And there'll be dips in that journey, but it's to protect the purchasing power. But in terms of real value creation, I think we're in innings one of revenue generating protocols printing money over and over again, like Hyperliquid, like Pump. And why should they not end up becoming really eating into the Bitcoin dominance against them and other similar crypto native protocols really becoming cash cows and being incredibly valuable as a consequence, and therefore Bitcoin dominance not needing to be as high as it was historically, because that was in an era where every protocol was not allowed to be profitable or was not allowed to share its revenues with, sorry, it was allowed to be profitable, but it wasn't necessarily allowed to share its revenues with people. So do you find that argument entertaining? Do you find it interesting? It's something I think I maybe thought in the back of my head. It was just nice to see it articulated, and it gave me something to think about.
I find it an interesting argument. However, I would add two things to it. One of which is that Bitcoin at a 2 trillion market cap is now at the size where it starts to become, or it's not start, it has become eligible for pension funds, for a certain institutional investors who can't buy ETH because ETH is too small to buy that. So now you have this new strata of money which is flowing into Bitcoin, which wasn't the case before. And at the same time, what you said about Hyperliquid, about Pump Fund as revenue generating protocols with a massive potential growth trajectory, that is true at the same time as well. So they can have the growth. But if you look at something like Hyperliquid at, what is it, 56 billion in FTV, even if it triples up from here and goes to 150, 170, we're speaking about 150 bill. And that's too small to eat significantly into BTC, especially under the assumption that we'll see more institutional money flowing into that. And even in a broader market perspective, I think it just will take more time to see a noticeable effect in Bitcoin dominance. Now, if you talk about like a couple percent points, sure, yeah, that can happen pretty quickly with an aggressive altcoin move. But if you're talking about like a more significant, more long-term trend down in BTC dominance, I would assume that takes a bit more time until we see those institutional buy-ins, some of which haven't even started yet, to slow down for that shift to be more sustainable and significant in its extent.
Yeah, I'm kind of open to the idea, because a bet on Bitcoin dominance going down is a bet that there will be more revenue generating crypto protocols that end up making a ton of money. And I don't think, I think you can bet on that. You can bet on there being more quality crypto native protocols making money in the future. And that not necessarily kind of cutting into Bitcoin's.
Yeah, exactly. And that's
dominance.
a bet they would express by betting on those protocols. But if there is a poly market for BTC dominance, I wouldn't bet on that going down. I bought Pump yesterday.
Yep.
I'd rather buy something like more Pump, more Hyperliquid directly, rather than betting on a massive shift in BTC dominance over a short period of time.
Sure. Okay. I just thought it was an interesting one to bring up. Let's get into the price action as usual to get you up to speed with everything that you need to know on the price action side. And then we'll get into the headlines. Of course, we got Bitcoin up 1% and a bit to $114,000, up 3% on the week. We got ETH up a couple of percent to 4.4K. XRP is up 1% to $3. BNB is up 2% to $900. Solana is up 2% to $225. We've got Tron up 3% to 35 cents. Hyperliquid is flat at $54 now, and Sui is up 3% to $3.60. On the meme coin side of things, we have Doge up 4% to 25 cents. Pepe is up a couple of percent as well. Pengu is flat at 3 cents, 3 cents or so. Bonk is up 1%. Trump is flat. SPX is flat to $1.40. Fartcoin is up 3% to 87 cents. Rect is up 6%. So doing pretty strong. They just announced a new drinks package, new drinks flavor. And that's everything on the price action side. Getting into the headlines, which we're going to discuss a little bit later, and the Web3 Roundup. We've got PPI below expectations yesterday, helping markets move higher. Legendary is going to break down what we need to know from there. Got native markets securing 53% of the USDH votes so far on Hyperliquid. Paxos is in second position. There was a little bit of a drama about allegations of bribery, which Paxos have denied. So we'll touch on that briefly, not getting too caught up in the dramatic elements. We've got Avalanche aiming to raise $1 billion across 2 deals to establish a crypto treasury company. To establish 2 crypto treasury companies to buy AVAX. So we'll discuss that. Those are the main headlines we'll talk about today in the show. Ledge, is there anything we need to know on the NFT side?
Nice, very nice. Chromie Squiggle Hyper Rainbow did sell. You have that in the snapshot. Did sell for 40 ETH. Moving on to the major NFTs to check in there quickly. We have Penguins being down a bit, being down 1%, but still above a 10 ETH floor at 10.25. We have Bored Apes doing a contrasting move, being up 3% on the day, 9.3 ETH on that end. And for the rest of the major NFTs, there's not a lot of major movement to report on. The other thing I quickly wanted to point out are other deeds, which have had a nice week. They're up 6% on the day, 20% on the week, at a 0.12, almost 0.13 ETH price floor.
Fair enough. Thanks for the NFT update. Getting into the rest of the roundup for today. SEC delays decision on ETH staking ETFs. That's a little bit annoying. Definitely want to see those go through soon. You've got Binance and Franklin Templeton partnering to evaluate tokenization use cases. Two titans, one in the trading infra sphere, one in the fund management sphere, traditional side, coming together. You've got the Hong Kong Central Bank revealing plans for more relaxed capital requirements for banks holding certain crypto. Got Pop Culture Group buying $33 million in Bitcoin, planning to expand into entertainment-related crypto. Polygon rolls out a hard fork to address finality issue, creating transaction delays. Van Eck announced they'll be applying for a Hyperliquid staking ETF in the US and an ETP in Europe. I think that's quite big news. Well, Liberty Fire announced Project Wings on Solana, USD1 pairs for launch and trading on Bonk and Radium. And then in some other news, Pump Fund has bought back more than 6% of the circulating supply of Pump. That is pretty significant. We spoke about Pump a lot yesterday. Maybe we'll touch on it again as it's looking pretty strong here. Rec Drinks announces new drink flavor, Moon Crush, Peach, and Raspberry. Shout out to the Rec Drinks team. I received a complimentary box yesterday. I received a box of the new flavor. I gave it a little try. Tastes very nice. Maybe I'm going to drink some on the day on the show when they go live. Very nice flavor. And finally, Vibes TCG booster packs. Legendary, talking about TCGs a lot, cards. Starting to sell for more than $500 per booster pack box on eBay. Those are bought for $150 not long ago. Vibes being the TCG created by Orange Cap Games, which is incubated by Spencer, who is also now the owner of the Moonbirds IP. So that's going quite nicely. That's the Web3 Roundup to get you all up to speed with what is going on. Ledge, is there anything that's catching your attention there before we hit the main stuff?
Yes, absolutely. The Vibes TCG booster boxes, I did see that. I also did see them on some of the platforms. I think BZ has them in stock, and I wanted to buy some yesterday, but there's not too many of them. Let me see if I can bring them up.
You want to do an OTC deal, Legendary? You need some physical TCG.
You have quite a few of them, right?
I got some boxes. Boxes.
What's the price for on BZ? $666?
4x.
Nice.
Very nice. It's actually such a cool box as well. It's really, really nicely done.
Buy a couple of those later after the show.
Nice.
That is the one thing I wanted to touch on. The other thing on Pump Fun, we said it on the show yesterday, that 6% is a pretty impressive figure, especially if you look at how fast it has been climbing. I had this chart up yesterday. Let's bring it back. It's basically 1% every 8 days right now, and it seems to accelerate a bit with obviously the fees increasing as well. So this is a very, very significant move. Also, I think there was a bit after you posted the snapshot, Upbit did announce that they're going to list Pump Fun as well. They did announce 2 tokens, one of which was Pump Fun, as I said, and the other one is HoloWorld. If you remember that AI project and that AI team, they TGE'd a couple of days ago and did actually quite well. They're trading at $1 billion-ish FTV.
Nice. That's pretty cool. That's a good update on the Pump Fund stuff. You're right. They had a couple of listings this morning showing this from, and for those unfamiliar, although it might be impossible to be unfamiliar, Pump Fund, the obviously incredibly popular meme coin platform that is generating humongous revenue, trading at around pushing 6 bill FTV now. Had two listings this morning. First, it was BitHum listing, and then Upbit, which is the prominent Korean listing. One thing I would just share just so people get a sense of how other prominent traders are trading. We have had positions in pump for a while. We spoke about it yesterday and was really getting our head around the numbers, right? Like, wow, these numbers don't make sense. Like, this is undervalued versus Hyperliquid. Again, there are legitimate reasons for there to be. I don't think a revenue to revenue comparison is relevant, although pump is out earning Hyperliquid in what it was anyway in the last 48 hours. It doesn't necessarily mean that should be worth more, right? Because revenue is just one part of evaluation. Part of evaluation is also potential for growth, and a lot of that has started to get priced into Hyperliquid 2 with all of the potential with this stablecoin conversation that's happening, plus HIP 3, which is coming, being able to launch your own markets. So a lot more is being priced into Hyperliquid. We're not saying it should be one-to-one, but we did feel yesterday that, okay, now that we're like seeing these numbers next to each other, this seems like some type of discrepancy. However, having said that, just want to give you some update from what other people are saying. Wrong User, as a very prominent trader and successful trader online, said this. Said pump is finally becoming a consensus trade now. Just after we discovered it. I guess we discovered it before it was consensus, but also rediscovered it again yesterday. He says, now I've been exiting my perp positions and enjoying the ride with a good old spot bag bought at the lows. I think that's a wonderful way to scale out. I mean, if you had timed this stuff perfectly, which obviously is hard to do, but say you did have a leverage position on at some point in time and you feel like you're up enough on that one, or you kind of take that one off, leave some in spot. I feel like that would be like a wonderful way to play it now. You're up big, you get to hold spot. It's clearly not as good as buying at 3 billion FDV as it is buying at 6. Like, obviously not. It's done a clean 2x from the lows. But holding spot might still be like a comfortable position. Runelord here in the comments, also excellent trader on Hyperliquid, said, I would have a pump position once Sol shitters pop off. Otherwise, no. I was asking the question yesterday, like, do we think that Sol strength, Sol dat story, the story of the Sol dat coming to buy a ton of Sol is helping? I think it's wrapped up in there for sure. I think Sol strength helps pump, but pump also kind of independent of that is still doing super well. But now, curious for your thoughts there. Do you think it is still a strong position to be in? It's obviously moved up quite a lot since we even spoke about it. Well, it hasn't moved up a lot since yesterday, but it's moved a bunch. And where do you see it going in the short, medium, long term?
I'm still holding my entire spot position and did top up on that yesterday, and I don't have any intention to sell just yet, despite being up on the buy yesterday, and obviously on the position that I bought when pump was down quite a bit. I think I'm willing to look at this buyback game for a bit longer, especially if, and that will then go into the first main headline a bit later, if we have this setup with PPI being down, with inflation data coming in exactly 1 hour, so 30 minutes after we will wrap the show, and rate cuts then being pretty much a sure thing, pretty much a consensus now for next week. And the question then becoming how many of those we will see over the rest of the year. So what generally is a good setup for the market. I don't want to sell my pump position just yet.
Okay. Yeah, I kind of like the idea of just having one eye on Sol as well. I know pump is probably independent from it, but I think the big move in Sol, like the relative outperformance in Sol over the last 7 days, has helped pump move more aggressively than it would have had Sol not moved in that exact way. So I like the Sol outperformance phase because I think that does help pump. I think pump is still undervalued irrespective, but I think that moment, purely from a trader perspective, might be interesting to watch. Otherwise, yeah, maybe you just hold spot. It's a good token, good team, lots of catalysts, I think. So, yeah, we'll see. Good. So you mentioned the PPI stuff, Legendary. Let's get into the main headlines today then. We want to first go to talking about PPI coming below expectations. Market seemed to move up yesterday. What do we need to know here? What are some of the core metrics, details that we should be aware of going into the rest of September?
Yeah, absolutely. Let's take a look. We had the data that the August PPI, which is the producer price index inflation, did fall to 2.6%. Expectations were actually at 3.3%. The core PPI inflation, which is basically PPI but excludes some of the more volatile segments such as energy and food, is down to 2.8% from 3.5% as an expectation. And then that also comes via Kobisi letters. The month-over-month PPI inflation was negative just for the second time since March 2024, which basically means that we are on track to see rate cuts next week. OSF did reconfirm that in a post. Massive misses on PPI is what he said. Full send rate cut season is imminent. If we get in line or below expected CPI tomorrow, which is today, which is what I said before, in 30 minutes after we close the show, you better be positioned accordingly. And by that, I mean being long. Looking on Polymarket, close the tab, sorry. To see the Fed decision in September market, there's one interesting development, which is that the chance that we see a 25 bips decrease, which was as high as 87%, actually did go down a bit to 79%. But it is not because we are thinking that we're not going to see a rate cut. That is still at 2%, but it is because the chance that we see a 50 bips decrease is now increasing significantly and now essentially stands at almost 20%. So we are getting a bit more bullish when it comes to a bigger rate cut. And then, unsurprisingly, the gold price also did react to that news by being down a bit, being down 0.6% on the day. Still very high, still at $3,620 per ounce. And the dollar price also reacted, sharing the Dixie on screen, which is the dollar measured against the benchmark of other currencies, has recovered a bit and reacted with a bit of strength, being up from 97.3 to 97.97 over the last 24 hours. It's not a lot even in absolute terms. It's up 0.17% on the day. But if you look at the performance over the last 5 days, being down 0.27%, 0.55% all last month, 5.6% over the last 6 months, it's a bit of a recovery that we're seeing as a result of the news yesterday.
Okay. Interesting. So what do we do with this information, Legendary? The two things that seem to be conflicting in my mind at the moment, which I think is maybe what is giving other people some angst as well. Maybe there's three things. One is we very much feel that rate cuts are coming. Everyone tells you that is bullish, and therefore, and I think people believe that to be bullish. I believe that to be bullish too, because so rate cuts are coming. Two, asset prices are very, very high at the moment. Like they're already really high, to the point where it feels like unhealthy for society that gold is so high and all of these things are so high. And there's something uncomfortable about buying in size at this, people are saying, oh, we're just going into the easing cycle. It's like, it's just beginning. Look, you can't deny it feels a little bit uncomfortable buying Bitcoin in size at 114 or gold in size at 3.6K or any of these things, stock market at 6.5. Like it's painful, right? Because it's so high. And then the third thing is the thing we were touching on yesterday, where if we are saying that this is an institutional cycle and we are led by institutional buys, the digital asset treasury companies, MNAVs, have compressed to such an extent that many of them are either teetering on the brink of not trading above their MNAV, or they're trading below already, which is already exhausting their ability to buy more. So the one thing I'm trying to square at the moment is, okay, it's an institutional cycle. We're going into a period of time where rates are going to start cutting. Maybe there's going to be additional flows elsewhere. But the treasury companies themselves appear to be struggling to me. So is that an issue if that is supposed to be the marginal buyer, or does the fact that we're going into this rate cutting cycle mean that the flows of capital are going to come, whether it's from the treasury companies, whether it's from elsewhere, it's going to find its way into risk assets regardless? What do you think?
I, to a certain extent, like that the treasury companies are struggling a bit, because if the MNAV is so compressed, it means that this flywheel of seeing like 3x, 4x multiplier on the net asset value is broken a bit. So it means the market is not driven by this massive speculation of Sharplink Gaming and other companies, other DATs, just trading at insane prices, which allows them to sell back even more shares and to just load up on ETH and other cryptocurrencies to an almost like unhealthy extent. And because this is not happening right now, I actually find, and the market is doing pretty well, I actually find that quite relaxing. Obviously, the downside risk, and this is something that Funky, who has his hand up, will also want to hear from in a bit, has spoken to, is the risk and is the things that he had reported on with strategy. So I still don't want to see a blow up of any of those treasury companies, but I'm happy to see that the current positive price action in the market is not driven by speculation on DATs, which isn't the most sustainable in my things, most sustainable of things in my opinion. So I quite like this setup. Just one more thing, what it means to my portfolio. I said it last week when I came back from a holiday that I was like sitting on 50% in stablecoins, 50% risk on. I kind of want to go a bit more into being risk on. Currently at 40% now risk on. Sorry, 60% risk on, 40% in stables. So I did increase my exposure by 20%, relatively speaking, by cutting that stablecoin stack. And I quite like that because I feel like it's a best of both situation. I have enough upside to earn if the market continues to do well, and I kind of have a hedge with productive stablecoins, which on the one hand are earning yield, and on the other hand are like farming potential airdrops.
Yes.
So even if the market corrects, I have like this nice airdrop cushion to mitigate for a potential correction.
I like it. I think I'm around 30% in stables as well. So I don't know if that's like has to be the number by any means. It just feels right for me at the moment. As you say, that 30% then being very thoughtfully allocated. In fact, I'm creating a list at the moment of, every now and again, you've got to review where the stables are. I'm creating a refreshed list of where I want to put them. And there was a couple of things that came on my list that I was writing yesterday that definitely need me to take some action and shift a few things around. So I'm going to share that. I mean, we'll share it on the show one day this week or early next week, but I'll put it in the Telegram as well, in our chat, in our best protocols section. If you do have some stables lying around, I think it's a helpful corner of the Telegram where we just kind of put the places where we are allocating ourselves. Obviously, nothing's guaranteed, but I think it's there's some definite updates I want to make there. Okay, so that's that. Curious, Funky wanted to bring you in here then, talking a little bit towards treasury companies and MNAVs not really doing, not the maths not really playing out in a way that allows them to go out and buy more, but still going into an easing cycle and wondering where that fresh liquidity comes from then. What's your view here? Does the MNAVs, is this a big enough set of capital to matter, or will the capital flow to risk on and risk assets irrespective of the difficulties some of the treasury companies will face?
I think the latter, based on what you just said there, B. And I was going to ask you a question going back to where you first started with how prices were so high at the beginning of this conversation. And I was just going to say, relative to what, right? Like
True.
index to themselves
Relative to history.
is high. Well, okay, fair, sure enough. The reason I say that, and I dropped this in the comments, and I also put it in the Modern Market Telegram chat. There is a great thread that I caught Raoul Paul had actually quote posted, somebody, Julian, that looks at all these macro indicators, some of which I had never even heard of before.
I've actually got this one lined up for today, Funk. It's a great thread.
Yeah, it is. It's illuminating. So I'll just put a pin in that because I'm sure we're going to talk about it a little bit more. So no, I think that to answer your question more directly, I feel that we're going to get these cuts. It's going to be more of a risk on thing. I think that we probably haven't even seen true mania if we've gotten to this level, and these are the prices now. And if we do get a continued increase in global liquidity and people become even more risk on, so whether or not the bull lasts 3 months or another year, getting into the stable coin part of the conversation, like what I've been doing personally, as you guys know, I lost my father and I've inherited some funds, and I'm not normally a stable coin guy. I just keep buying Bitcoin. And what I've been doing is buying stables and putting those stables to work, because whether the bull goes on for 3 months or 12 months, I feel like it's risen a bit, right? We've been talking about this on the show for the last 2 years. The bull really started kind of the end of 23, if you look back at it. And so I think that there's a smart play in using stables wisely and farming a lot of airdrops or just getting good yield and so on and so forth as a safer option within your portfolio. You guys have convinced me of this. And so kudos to you both, because now I feel like it's probably not as high as yours. It's maybe like 20% at this point, but still, I think that that's a really great way to play all this, especially as we're unsure of how this risk on environment is going to play out.
Yeah. One thing I would add to that in terms of strategy, this is something that, I don't know, I just did it for the first time ever. It was the first time I was going through it. And I think it was a really helpful strategy. I've spoken about it before, but earlier on in this cycle, when I made significant wins on the angel or VC side, or it doesn't really matter where the wins come from, so that like whether or not that applies to you or not, that method of winning, say you come in, you make a big win on something early on in the cycle, I was like, okay, keep some money for tax and then put 75% into Bitcoin. It was like, I feel like we're early. This is very early days. And I think Bitcoin was around like 60-ish K at the time, something like that. You have to, don't quote me on it, but it was early days. This was like pre-Trump and all of this stuff, but stuff had still started to move. And what I did, as those payouts continued to come out over the course of the next 12 months, the proportion that would go into Bitcoin versus stables would just scale down slowly. That's why I keep talking about, in terms of risk management for the next 6 to 12 months, being like, look, I don't know when the top is. No one ever thinks we're at the top when we're at the top. And I don't intend on full stacking something when I think we're there, but just like slowly scaling out of the strong positions from a position of strength is worked beautifully for me. Well, actually, in that case, I was scaling into Bitcoin and also out of the kind of angel position. And it was like decreasingly adding to the Bitcoin position as Bitcoin got more and more expensive. Now I've still bought Bitcoin at 120, 118, 115, 113, 110 since then, and 100 or so, but it's kind of in proportion to the depth where we are into the cycle, if that makes sense. So I'm not saying that's 100% the right way to do it. I just think it's a helpful thing that I have considered, and it definitely worked for me earlier. And I guess what I'm saying is now, as we're getting towards whatever stage we're in now, which may not be late, we might still have a good run to go. It just means that proportionally, say I had that exact same big win now, maybe it would be 20% Bitcoin, 80% stables, for example, just because my view is we are certainly later than we were in the start of 2014, for example. Ledge, curious for your thoughts on that strategy. They might be helpful to take a look at what these late cycle economy ingredients are to give people a heads up.
Yeah, I like that balance to say you don't want to go 80% into BTC with new profits, but at the same time, because I feel like a lot of people will think along these lines and will be like, yeah, do I really buy BTC with size at 114K? That the more risk on options become more attractive. And it is actually the time in the market where I started buying some of the newer meme coins again. Like really, we're talking sub 10 mil market cap, not like fully in the trenches hunting down 300, 400K tokens, but still like newer, relatively small stuff, and putting bets on a couple of those, seeing how that will do, because I do want to have like
I like
bets
that idea.
that have a nice upside. And now just buying, I don't know, like one more BTC or so. Yes, always will add to BTC, and that is with a long multi-year horizon. But I think there's like some really good potential for short-term trading here.
I like that idea a lot. I bought a little bit of a low one as well. In fact, I'm almost certain we bought the same one.
We have one in common for sure. Yeah, I know which one you're talking about.
But I think it's too low to really talk about it
Yeah, I agree.
on the show. It's not the same as Pump at like $5 billion. We're saying, yeah, let's just buy some right now. Okay, so yeah, I actually really like that idea, by the way. To the extent that you think like there's a additional pump to go. Like, I quite like the positioning here after a lot of the meme coins have pulled back, right? A lot of them have pulled back. I quite like the risk reward on that basis because they've pulled back so much, whereas a lot of the other assets are, still plus or minus 5% from all-time high. Let me just, conscious, we've got a few headlines to discuss today as usual, but I think this is an interesting discussion, so we'll stay on it for one more second. The thread that Funky shared was this one by Julian. He works at Real Vision, really excellent analyst. I've heard him talk, I've heard him write, provides really interesting insight and backs it up with data and graphs and things like that. He said, I've been seeing a lot of chatter on X about peak cycle and how the economy looks late cycle. So I wanted to tackle this head on and share a few thoughts of my own. A classic late cycle economy typically has all of the following ingredients. And look, I'm just going to read through them, even if we don't know 100% what all of them means. Manufacturing sentiment is extreme. Services sentiment is extreme. Home builder sentiment is extreme. Consumer confidence is high. Worker confidence is high. Investor sentiment is very bullish. Small business confidence is high. Job openings and hiring plans are rising. Wage data and surveys show accelerating pay increases, and CEO confidence is strong and CapEx is booming. He says, I could add more to this, but when you scroll all of these inputs and turn these into a single time series, here's what you get. So he goes on to basically just describe that this is all these things which you usually see at the end of a cycle are not happening. The layman's insight to that, from my perspective, as someone that analyzes this stuff now, but is not like a historical economist, is the economy is way too weak for these things to be late cycle. Basically, it's like talking about worker confidence, talking about small business confidence, job openings and hiring plans going up. Like all of these things are really, really struggling. The economy is depressed. I don't know if any data will ever be able, or any politician will be able to say that any data is saying that we're in a recession or saying that we're in a depressive environment, because it's politically suicidal to say that. You just can't admit that things are weak anymore. So that would be my read of it from the economic perspective. We're simply too weak. That's the argument being made, which I'm open to. I'm open to that idea. That gives me something to think about, because I would agree that those economic indicators are certainly not flashing in any way. Ledge, do you have a take on that before we hit the headlines in the final 10 minutes of the show?
Yeah, I think it's an excellent post, especially around A, sentiment part, B, the job openings. We've seen the complete opposite of that, actually, with not too good sentiment and horrible job data reported over, when was it, last week or so? So it either we are not late cycle, or the cycle is structured in a completely different way. And I would tend to believe that it rather means that we're not at the end of the cycle.
Okay. Good stuff. Right. I mean, you've kind of touched on the PPI stuff already. Does that mean we've done that section? Did you have anything else to add on
Nope.
PPI?
everything I wanted to report on.
Okay, so let's get into the second headline today then, which is this one to do with native markets securing 53% of the USDH vote so far. Remember, this is a conversation about the USDH ticker, which is going to be a native stablecoin on Hyperliquid. Hyperliquid being by far one of the biggest winners this cycle, achieving an incredible valuation and rise, given that it is printing fees from its perp exchange. The battle, as we kind of saw it, is between a few entities. We've had multiple people trying to win this ticker, which is being voted on by the the validators. And the reason why it's so valuable is because USDC, which is Circle's stablecoin, has hundreds of millions of dollars on Hyperliquid at the moment, and all of the yield which they earn is internalized, and they earn that for themselves. What this is proposing is, look, let's invite someone to be one of the main stablecoin issuers on Hyperliquid, and with the yield that they earn, they're going to be buying back Hyperliquid or doing things that are more Hyperliquid aligned, which should be very beneficial for the Hyperliquid ecosystem. So that's why this is so valuable for the Hyperliquid ecosystem. That's why it's so valuable to all these issuers, because they're going to see a truckload of TVL into their specific stablecoin. So we've seen applications from Agora, Athena, Frax Finance, Native Markets, OpenEden, Paxos, and Sky. And some of these have really boasted incredible traditional qualifications for this job. Paxos, one being, I think one of them is partnered with PayPal, had integrations with PayPal, and I think that was the Paxos one actually.
Yeah.
So look, this is where we are at the moment. Ledge, if you want to share the screen, Native Markets has, if you click on Team Overview, you'll see the graph. So what you'll see just beneath is Native Markets with more than 50% of the vote. The unassigned element of vote is 25%, and the second highest vote is Paxos Labs with 12%. So even if all the unassigned was allocated towards Paxos, it looks like Native Markets has got the vast majority already. The one interesting, again, I don't want to dwell on Twitter drama, but it seems pretty relevant given how much money is at stake here. There was a little bit of an allegation going around that Paxos, which is a very well-established team, they run PayPal stablecoin as well, were engaged in some type of bribery. This has been denied, so it's purely an allegation. To be clear, this allegation was made by a cat on Twitter, very prominent cat. CL, this account on which actually represents, I think, 15% of the validator votes. This is someone who's been on crypto Twitter for a long time, ex-trading desk. I think it's CL Capital. I don't know. It's not in the bio anymore. Anyway, they said the cat summary is that they have talked down on multiple projects multiple times about Hyperliquid projects and later on deleted. There are current rumors of people, firms being bribed indirectly, meaning not directly monetary offer. He gave a few sources, none of which were perfect, to be honest. He said there was a DM with a startup on Hyperliquid, a call with a person who wishes to be anonymous, plus a bird's eye view of things because they are a shareholder in multiple trading firms. They responded, I don't know what to call them. The cat responded further when asking for further evidence, said, well done. Well, sorry, they said, to make it easier, I'm just going to say there will be no solid evidence provided because basically they were concerned that Paxos would go back and break business ties with some of the people who might have spoken up against them because some of them are already in business with them in some way. So that's actually got an interesting response from a variety of Hyperliquid native people as well as some VCs. Mike Dudas, prominent investor, said, this is not how Paxos operates. I worked there in 2021 with honorable people who are friends. This type of reputational napalm with no evidence and further claims that it can't be shared because Paxos is so evil that they'd retaliate is not okay. And there are other examples of people even within the Hyperliquid community who are not maybe associated with teams before, just saying, guys, you got to provide evidence. Like, this kind of gossip style, trust me without verifying anything, is not acceptable. This is a very valuable application. There are very reputable people involved. We should not be doing this. We should not be creating these allegations without providing the evidence required, given the gravity of the application. So that's the situation there. I don't like dwelling on the dramatic side, but given the gravity of the application, thought it would be relevant to provide the context. Hyperliquid seems to not mind about any of this. It is up at $54 still. It's up 18% in the last week or so. Clearly very, oh, sorry, it's at $53.30 now. So down a touch on the day, up 16% on the week. So clearly not particularly minding about anything that is going on. I think it's considering that the whole demand for stablecoins in the ecosystem is incredibly bullish, that so many people want to be involved. So I don't think there's an issue from that perspective, but Ledge, curious to hear your thoughts here on any of this aspect, whether it's to do with the manner of conducting the application for the stablecoin or anything that you think for Hyperliquid moving forward.
I don't want to comment on the drama bit, but I'm gonna comment on the applications. It's really interesting to see all these institutional players come in, and to the extent that they go to in their applications with, I said Paxos having the PayPal integration, trying to get Venmo on board, and all these other things, which are insane pre-commitments before they would have even won that deal. Yep. To see that this interest in Hyperliquid in getting the USDH ticker is so strong from all these significant companies, and even Sky MakerDAO saying, they're gonna put in, what was it, $6, $7, $8 billion, I don't remember, and basically make Hyperliquid's DeFi TVL flip Solana in one go by doing that. It speaks to me how bullish that is for the entire Hyperliquid ecosystem. Those I really want to go to Funky, who has his hand up, and curious to hear your thoughts on our discussion on Hyperliquid so far.
Trust me, bros, I got sauces. Putting aside the drama, I just want the audience to know, in case they don't know a whole lot about Paxos, I shared this in the Modern Market chat. Paxos was the first ever, at a state level, admittedly, regulated stablecoin in the United States years ago. I held a lot of my stables in what it was used to be called Paxos USD, and then they rebranded to make the alignment to look like there were other stables, so it's USDP. And that was in New York State, which very famously has BitLicense and is very anti-crypto and everything else. There is probably not a better team. They were the ones that used to issue Binance's BUSD before all the FUD and Binance and CZ and everything else, and then they had to withdraw that liquidity and basically burn all those stables. So this is a highly, highly reputable company, and I can't believe that these wild accusations are out there. That I just, again, whatever the cat says, I love cats. I think it's a bit much, and Paxos is a great company.
Fair enough, man. Yeah, I'm not a fan of making accusations without them being justified, and in particular, I mean, people I think know this. I was a former defamation lawyer. You can mostly get away with saying quite a lot of stuff in the current environment because a lot of comments on social media like kind of throwaway, and 9 times out of 10, if you're like a individual social media account, or even if you're a corporate account, frankly, you can probably get away with stuff. That's not legal advice, but the things that you really need to be careful of is when you become a bigger account, like words matter when you are a bigger account. Like it's literally weighted, and this is how it works in UK law anyway. It's weighted more seriously if you are a big account. And in addition, if there's more money on the line, then you're really taking a reputational risk, a defamation risk, when you're calling into question people's reputation, and it's going to have a very easy to argue financial consequence for someone. Sometimes it's very difficult. Like you say, this person said this thing about me, I experienced reputational harm. It's like, okay, well, can you quantify it? How much reputational harm did you lose? Did you lose some job opportunities? Did you lose whatever? Like here is like a concrete vote that is taking place which with a whole load of money on the line, and people can kind of calculate what kind of money they would make by taking the USDC TVL and just transferring that over to like, this is what it would be if we were the issuers instead. So I think people definitely got to be mindful of that in these kind of circumstances, but appreciate the additional context anyway, Funky. Look, final headline for the day, Ledge, is circling back to DATs in a way. We've just got a couple minutes left. Avalanche Foundation, $1 billion setting up for an AVAX treasury firm, but I think there's some interesting kinks here. So what do we need to know?
Yeah, let me give a summary. This comes via an article on the blog. As you said, Avalanche Foundation has a $1 billion raise to set up AVAX treasury firms in the US. So they want to raise $1 billion across 2 deals to establish 2 treasury companies. And those treasury companies will use the proceeds from the raise to purchase AVAX from the foundation at a discounted price, which is quite an interesting setup to start with. So you have the foundation wants to raise $1 billion, put that into 2 companies, and use the funds that they raised to basically transfer tokens from themselves, from that foundation at a discounted price into these 2 companies, which, well, in itself is a bit of a quirky setup, to put it like that. A bit more details on the deals. One of the deals targets to raise up to $500 million in a private investment in an Nasdaq traded company. That investment is being led by HiveMind Capital. And the other deal involves a SPAC, a special purpose acquisition vehicle. This one then being sponsored by Dragonfly Capital, and also aims to raise 500 mil to be completed within the next month, to be completed in October.
So yeah,
I don't like it too much. The market liked it. AVAX is up 10%, trading at $29, but I don't like this setup.
The only thing I would say is, look, we took the news from the block. They're usually pretty good in general. I've watched a lot of what Dragonfly has to say about these DATs, and they've been fairly critical of certain DATs that essentially create, and this is not about Dragonfly holistically, maybe certain individuals I've listened to on podcasts, and I think they're generally quite good at pointing out where the DATs are like predatory, or whether they're like actually creating some net new demand for the token. So I'd like to read some of the details more. And I think ultimately this is what you need to do with all of these things that we're slightly unfamiliar with the constructions. And if you really want to get to the bottom of like, right, is there going to be more demand for the token here? Is the price going to go up because of this new capital? Or is it just lock tokens getting moved around? Need to get into the back of the documents and read them for ourselves, which is kind of one of the core things we say at the top of the show. We say it all the time: do some reading, do your own research, double check, verify, rather than even just taking a headline from an article. So I think that would be the wise thing to do here, and in all cases, frankly. So that is that for the day. Unless there's anything else, guys, let's call it there. Yeah, it was a good show. Thanks so much for joining us, as always. Thank you to my co-host Legendary for being up top with me. Thanks to Funky for his contributions. Thank you to everyone in the YouTube comments and in the Telegram chat and in the Twitter space who are joining us live. We thank you so much for joining. We will be back same time, same place, 7 a.m. Eastern time, live on X Video, Twitter Spaces, and on YouTube. And you can catch us on Apple and Spotify podcasts if that's where you prefer to get your news. We'll be back same time, same place tomorrow. Have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.